Coach Matt from Tackle Trading to bring you a video glossary on bearish downtrends. Now, we've talked about this in previous videos about how a bearish down is created through lower lows, lower highs, lower lows, lower highs with a nice little, downward movement to angle on the bearish downtrend. However, let's look at this from a little bit more simplified pattern. As the market starts going down initially, you start to see an increasing momentum. A lot of times that is caused through big red candles. As the bears take control, it drives price action down. When it starts getting into support of the lower low, you will start to see a slowing momentum impact with small candles. Many times these are dojis or morning stars or harami type class candlesticks. You can check that out in Technical Analysis 101 over there at tackletrading.com. Also, as it comes back up into resistance, it forms a lower high. Once again, driving price up, slows down, rinse, repeat, and the pattern is solidified. Lower low, lower high, lower low, lower high. Now, as the pattern first begins, you typically will see some type of reversal pattern, some type of neutral type market. So as a bearish downtrend actually starts, it's with the breaking of support. Once support is broken, you will now have the very beginning of a bearish downtrend with a lower low. That will then create the pattern lower low, lower high, lower low, lower high. And this pattern will continue until it doesn't. And many times it's almost like a self-fulfilled prophecy that traders just hit over and over and over again until there's one of those hypothetical unknown variables, the variables that we don't know what's going to happen in the future, geopolitical variables, economic variables, fundamental variables, stock variables, earnings variables, whatever the million of different variables are that exist every single day, but the pattern maintains throughout its time frame. Do not get caught up into those variables. You trade the pattern until the pattern changes, period. End of sentence. Now let's look at this from a price chart perspective. As you can see, we have a nice little sideways neutral pattern here. You can call this a little bit of a head and shoulders reversal pattern. Once it breaks support right here, at that point, then you have a bearish downtrend. Lower low, lower high. Lower low, lower high, lower low, lower high. And as that pattern and that trend starts to get longer and bigger, you start to see the momentum drive it down as more bearish traders hit it over and over and over again, and that pattern will continue until it doesn't. We trade the pattern until it changes. This is Coach Matt from Tackle Trading. Hope you enjoyed the video glossary on bearish downtrends. And if you did, go ahead and like the video on YouTube and always share it with a friend.